Okay, Mark Cuban, welcome to the stage at Ethereal.
Thanks for having me on, Daniel.
All right, great to have you back talking with us. Let's start this way. We're grateful to have you. I was grateful when we spoke a few months ago for Decrypt, but at the same time, you're kind of everywhere right now talking about crypto.
Yeah.
Well, you Ellen show, I mean, it's kind of funny. And someone asked me, what is he doing exactly? I mean, what is the end game for Mark Cuban and crypto?
I mean, there's no end game per se. It's any new technology that I think has real opportunity. I've tried to be involved with going back a long time. And so, you know, I just like it. I like geeking out to new technology. And sometimes, depending on who you're talking to, but in circumstances like this, you get to check your whole card and learn new things. If you say, will tell you you're full of shit and you learn more. And then, the stuff like Ellen, because I'm on Shark Tank, I get opportunities like that. And so it gives me a chance to promote Shark Tank and gives me a chance to talk about new technology. And so, a year ago, I was talking about AI. Now it's AI and crypto.
See, yeah, I guess what I'm also saying is, there was a time not that long ago where you were not necessarily one of the biggest names and faces in crypto. And now I feel like in this moment, you really are. One way in might be to ask you, who have been the most influential people you think in pulling you into this space? Who have you talked to get more into it and as part of your journey?
One of the guys I work with, Bob, has been, Bulgaris has been really influential. He's super smart on DeFi in particular. And so he opened my eyes towards DeFi. And I've been following crypto forever, but once the crypto summer hit with DeFi, it really opened my eyes to smart contracts. And then with NFTs, it opened my eyes even further to smart contracts. And you only have to hit me over the head with it a couple times before I figure it out.
I'm glad you mentioned NFTs. There's so much you and I could talk about, but that's kind of our purview for today. And it is certainly the hottest topic du jour right now. We'll see what it is in 3 months. Everything could change. But I've got a list here and I want to share it. You did your own NFT collecting site you launched, Lazy.com. You've invested in Nifty's, an NFT site, Mintable, an NFT site, NFT42 and CryptoSlam, which are both NFT data tracking outlets, OpenSea, which is one of the better known NFT marketplaces, and then Espresso, which is actually a DeFi tools startup, not quite NFTs, but not unrelated. But that is quite a laundry list. I mean, are you just spreading your bets right now? What are you building?
A little bit of spreading the bets, but just trying to hook up with people who are smart. People have first mover advantage, smart, and I think have something unique for them. Each of them has their own unique aspect that was impressive to me.
When we talk about what's happening with NFT artworks or collectibles and the prices, a lot of people look at that, even people who are in crypto and can understand and wrap their minds around NFTs, and they just say, well, that's a clear bubble. Does it look like a bubble to you right now?
Well, there's different reasons. Let's define bubble, right? Having been through one before, when you've got a finite number of items that are available for sale and everybody and their brother is chasing those few items, then you can get a bubble because everybody's just competing for the same thing. That's not what's happened with NFTs. In January and in February and in March, there were more buyers than sellers. There were more speculators than things to speculate on. And so you saw prices go up. Now, because it's so easy to create an NFT and anything that you can make digital can be an NFT, and even things you can create, second derivative levels and third and fourth and AI driven and generative. And, effectively, there's no limit to the number of NFTs. And so we've quickly gotten to the point where there's more NFTs than there are buyers. And when you get that, supply and demand is undefeated and prices are going to go down on average. Now, for specific collectibles, that's different. And so you had speculators who came in to drive prices up. Then you have people who were just new to it, trying to figure out, is this just a cash grab and, and learn it and made some money or lost some money. And then you have true collectors. And that's what I try to be. Like when I buy things online, it's because I like them. Not because, okay, let's hope they go up in value and I can flip it real fast. I haven't flipped any. I've sold some NFTs that people have transferred to me that I don't like, but I haven't flipped anything really. And because I'm a collector, and I think the collector's market, if you buy things you like at a price you value it at, then you're fine.
Since you're emphasizing the collecting aspect and really sharing the NFTs, What NFT that you own and hold are you most proud of? What do you think is the coolest one?
All my Mavericks related stuff. Obviously, but I like my new Me Bits that I got. I like my CryptoPunk that I got. I like them all. They're all my children. But if you go to lazy.com/mcuban, you can see what I pinned and you'll know. That's why we created Lazy, just to answer that question. What NFTs do you have and which do you like the most? And so, go to lazy.com, you connect your wallet or wallets, and you pin the ones you like the most, and the rest just show up. And it's easy. It's a URL shortener. So it's lazy.com/mcuban. You put it in your profile, you put it in an email, wherever you want, and it's your own personal gallery. And so, if you want to find out, lazy.com/mcuban.
Oh boy. Plug, plug, plug.
Always, that's how you start. I'm always
smart. Let me push you on something that.
Did I tell you that Shark Tank's on Friday nights on ABC? And
I didn't know that.
Friday, see, you didn't know that, right?
Let me push you on the narratives, because it's such a narrative-driven space, especially as you're out there, in many cases, kind of addressing the mainstream folks, because a lot of people right now who aren't crypto literate, they just see NFTs are everywhere, I don't understand it. And similarly, certain narratives rise to the fore. So one of them now is NFTs in the environment. And it's rooted in some truth. There's also some misconception, but you just have a lot of people who say, well, I've heard that they're terrible for the environment. I mean, right. Do you get pushed on that? And what do you say on that?
No, not really. I get that with Bitcoin more than anything else, and to a lesser extent, Ethereum, for obvious reasons, right? But, Bitcoin's digital gold, I just read an article, a report that I think is accurate, that says it takes up more terawatts in electricity to mine gold every year than it does to mine Bitcoin. And gold has some utility to it, but so does Bitcoin. And if Bitcoin were to replace gold, as a store of value, then there'd be a net negative. So you can argue that Bitcoin does should use less electricity and should be more efficient, and I think there will be things that solve that. But right now it's no worse than gold, and you don't hear people complaining about gold. Not that plain what about is a good answer. And then on Ethereum, with everything going to proof of stake, that's going to change 180 degrees. But what I would also tell you is that if you look at the impact of DeFi, which is to effectively replace so much of centralized finance, traditional finance, any decent sized city or larger, one of the biggest three buildings is always a banking building. And there's people upon people who drive and consume electricity at the buildings and create transactions and create bank branches and create all this environmental impact that no one tries to offset against the impact of what Ethereum in particular is doing. And so I'm less concerned long term. I think it's a net positive, particularly in Ethereum moving to proof of stake, and DeFi and smart contracts is a net positive because it takes fewer people to do more.
It's funny that you mentioned bank buildings. I say also, amid the debate about Bitcoin and its energy use, I've never forgotten, I went to college in Vermont, and it was a small town in Vermont, and at night, everything would be dark, except there would be certain office buildings or even buildings on the college campus where every light was kept on 24 hours a day, 7 days a week. And I always thought, how much electricity must that use? And that's not to distract, but
relative. And, we want to do the right thing for the economy or for the environment. And so, look, there are issues that need to be addressed. And, there are miners, particularly with Bitcoin, that are using clean energy. It's not all just old school energy, fossil fuels. And so, because they realize it's a problem, and it could impact the value of both gold and Bitcoin. And Ethereum, like we said, is solving that problem.
Because we were talking about the believed or purported environmental impact of minting NFTs on Ethereum, let's talk about what I see as the other main controversy or pushback NFTs get. And that is, what exactly do you own? People have copyright questions and concerns. Are you really just paying for, a spot on blockchain that says you own something, but what do you really own? Just that. Some people say you're really just paying for a URL address. I mean, what do you say to those concerns or kind of criticisms of the whole thing?
Collectors get to collect what collectors want to collect. That's what I say. If it's digital, it's digital. There was a time when people used to talk about how many MP3s they had. And to this day, you can buy an MP3 for $1.29 of your favorite song, and you collected that song, and you know you can get it for free somewhere else in a stream, but you want to have it. Or just like, way back in the day, people would buy record albums, whatever. People collect what they want to collect because they enjoy them. And the beauty of a digital collectible is it's chill, right? It's easy to buy, it's easy to sell, it's easy to hold, it's easy to look at on your phone. If you spend a lot of money on a baseball card and it's in a case, I used to collect stamps as a kid, and you'd put them in a little case so they wouldn't get messed up, right? And then you'd hide it so my little brother wouldn't get to it. And so I couldn't really show it to anybody. Now it's just, hey, this is my NFT on lazy.com. You can look at it on your phone. Everybody gets to see it. I can forward it to anybody. I can show it to anybody. Your artwork, and you probably took a picture. If you bought a famous work of art, if you had the Mona Lisa in your house, right, and you had it all protected, you know what you'd probably do? You probably take a picture of the Mona Lisa, put it on your phone, and send it to everybody and say, look at my Mona Lisa, where the real value came from the digital file. And then finally, particularly with kids, if you want to know how valuable a digital file could be, ask someone to delete them from their phone, right? There's no worse moment in someone's life than having to choose what to delete from their phone when they run out of space. It kills us all. Nobody wants to do it. That's how and the point is, we value things that are digital. It doesn't have to be only physical any longer.
Yeah, I just did that the other day. I had to clear all my photos, and you're right, it creates a lot of agita. So
the anxiety is enormous. Whereas, the Mona Lisa you may or may not have. All right, you have anxiety, someone might break in and steal it, but it's not nearly the personal level of stress that you have deleting the pictures of mom or your dog or whatever.
I'm glad you mentioned perceived value. I reference a blog post of yours from about 6 months ago often, which is, something has whatever value the group decides it has. And so briefly, I mean, if we go back to Bitcoin, I always tell people when they're asking me for the one-on-one, the 101, I should say, lately, I say, look, there are people who thought Bitcoin was crazy at 20,000. Now it's at 60,000. So, at what point do you think it's crazy? It's just what the group perceives. But to stick to something you told me when we last spoke 3 months ago, you said that you think Bitcoin is kind of stuck with store of value, which is not necessarily all negative. That's a good thing to be stuck with. But as we move forward, I mean, people say Ethereum has more value because of the business applications. How do you square those two things?
Yeah, I mean, they're independent, right? Gold and silver are independent, but I think Ethereum has greater long-term value, period, end of story, because Ethereum has more utility than Bitcoin does. It's not that Bitcoin can't be used for financial transactions. It can and has been, but it's just more involved to create applications and to work with Lightning Network and to try to because it's a $60,000 per asset and people prefer to use it as a store of value to get people to transact with it. And it's one of the reasons Dogecoin has gone so well, right? Because it's easier to transact with, right? Yeah, Mr. Shibu or Shiba, I don't know how it's pronounced. But with Ethereum, the beauty of Ethereum is that look at NFTs and DeFi. If you really want to get involved with either of them, you pretty much have to work in Ethereum. And if you want to stake at all, you pretty much have to work at some level with Ethereum or Wrapped, whatever, on an Ethereum related blockchain. And so all these things create utility. And I think one of the big things, huge things that people miss in terms of valuing Ethereum, one, NFTs is just the tip of the iceberg. It's just a proof of concept for the applications that businesses are going to be able to create with Ethereum and Solidity. So, I mean, we haven't even seen businesses start to buy Ethereum to use them for applications. Now, maybe they'll do their own blockchain and create their own tokens. Maybe they'll, use L2s or, other blockchains, competitive blockchains, Polkadot, Solana, whatever, right? But right now, Ethereum's the reigning champ. And so I only think there's going to be more transactions that take place. Now, again, some people will argue you're going to reach the limit of TPSs, but we'll see L2s deal with that. And we're seeing that with optimism and ZK rollups, etc. And so I think Ethereum can go way further. That's one. Two, and if you look at 2.0 staking, right? There's like 4 million or something, I don't even know the exact number of ETH that's being staked. And that's just one example of what's being staked. If you look at what's being used to create DAI, I don't know if mint DAI is the right word, where it's just staked there and it's stuck there. That effectively is deflation for Ethereum. And so, while you have some level of inflation, and 1559 is going to combat that some, because there's so many applications for staking Ethereum, again, ETH 2.0 and so much more. I don't have all the total numbers, but between DAI and ETH 2.0 and all the staking that happens to provide liquidity everywhere else, I mean, it wouldn't shock me if we're getting significant deflation, which is one of the reasons that ETH is skyrocketing so much. And so that's why I think ETH really is uncapped in terms of how high it can go.
Yeah, it's I just said in my intro to the summit, it's like $65 billion worth that is currently locked up in DeFi protocols. I mean, the number is just getting bigger.
That's not even including staked for other reasons, right? And so, and who knows if 65, what's the total market cap on it now? Like 380?
Yeah.
Right? And so if more applications come along and 1/6, let's say 16% of ETH is locked, right, longer term, right, or at least self-fulfills, and that number grows, that's deflation. And that's going to exceed what's mined. And particularly with 1559, then you add that to the pie, and it could get crazy really fast.
You love to talk about the different business applications for Ethereum and for smart contracts. I love when you say we've only scratched the surface. There was something ironic that just happened maybe a week or two ago I wanted to ask you about, and I'll tell you why it was ironic. The EIB, the European Investment Bank, did a test run where they issued bonds on Ethereum blockchain. And a lot of people said, wow, here we go. We're off to the races. See, what if banks started adopting Ethereum for issuing bonds? Big potential there. And the reason it was ironic to me was we did this a few years ago where banks were coming out saying, we love blockchain and we're thinking about using blockchain. Bitcoin, not so much. We don't love that, but we're thinking about creating our own blockchains. Well, what has changed that has finally led these big institutions to have a change of heart where now they do want to use actual, not their own private, stupid, closed blockchains, but the Ethereum blockchain?
Well, what's changed is competition. I saw something that said 2 million people are using DeFi right now. That's 2 million fewer, not necessarily 2 million fewer customers, but that's a whole lot of money that's not going through the banking system. And they're having conversations with everybody who's saying, and conversations I had, like just in the Mavs locker room last night after our game against Miami, we were talking about DeFi and how I told these guys, you got to learn it a little bit. And I told them, look, effectively, if you were to convert to DAI or just with Ethereum, right, you can make a good 4%, 5%, 10% if you went and converted some things. And let's just say it goes horribly wrong and it collapses 50%, 75%. How's that compare to your savings rate right now? You're making 0.02, and so, you're not going to lose, unless you're stupid, you're not going to lose your capital, right? You're just going to lose the upside. You might lose whatever the coin is you're getting paid in, but your Ethereum is going to be locked, right? Or your DAI is going to be locked as a stable coin. I don't see those taking a fall. Maybe your DAI fluctuates by 2, 3, 4% in any given moment, right? Your ETH may go up and down in value, but it's not, the number of ETH you have is not going to change. You're still going to be able to get it out, but you can still, make 10%. And if you make a mistake and you get paid in a shit coin that collapses, you still have your ETH and you haven't really lost anything versus the 0.02% you got from your savings account.
Are you saying that we do not need to worry about another 2018 like crypto winter? We in the crypto media business who always worry there will be a big pullback? I
don't think you're going to see it. I think Bitcoin is the greatest risk of a pullback simply because there's so many dollars worth of derivatives, right? And so people speculate so much, and you don't have an efficient market in terms of buying and selling it, right? Each global market has its own pricing, and a buyer of Bitcoin or any crypto for that matter doesn't automatically get the best price like you do with a share of stock for the most part, right? Because the New York Stock Exchange or the NASDAQ or the SEC makes it so all buyers get the best available price or as close to it as you can get. And so because of that inefficiency there, and because of the amount of leverage that's allowed, you're going to see the possibility of not just 10,000, but maybe a $20,000 or $30,000 decline because somebody got really, really stupid. And it's not like it only happens with Bitcoin. Viacom, there was a guy who had a family office where he had $30 billion in derivatives that he just kept on buying the same stock over and over again, which
Archegos.
Yeah, okay, right. And boom, I don't know how much Viacom collapsed, but it was, more than 50%. And there were other stocks that collapsed as well. So the risk isn't as much about Bitcoin per se, like it wasn't Viacom per se. And it's not about the intrinsic value of Viacom or Bitcoin. It's Warren Buffett called derivatives weapons of financial mass destruction. And that's what they are. And that is the greatest challenge right now that we have to Bitcoin and to a lesser extent Ethereum, because there's so much leverage that it could destabilize for a short period of time, at least, a marketplace.
My takeaway from the Archegos fiasco was if you're going to load up on leverage, maybe don't choose old school media and telecoms names.
Well, no, even if it didn't matter what it was, I mean, you could pick the most advanced tech company. You could pick, if they did the exact same thing with Bitcoin, where they took perpetuals and they just leveraged on top of the leverage, on top of the leverage, on top of the leverage, so that you were leveraging, 100 times with $1 billion, Bitcoin is toast. If that collapses, Now, could it bounce back? Yeah, I'd be a buyer. If it dropped to 20,000, I'd be a buyer. 30,000, I'd be a buyer. There's always a price where it'll find a bid, but at the same time, that creates its own collapse, right? Because all the other margin calls and everybody little, or not even so little, right? Because there were a lot of margin calls on Viacom and the other stocks that Archegos, screwed up. And so that's the risk more than anything. And that's where regulation could help. We don't need 100 times leverage. That's ridiculous. That's the negative for the market. And it could really hurt a lot of, small players can come in and get a lot of that leverage and they're toast, if it goes against them. And that's why, on options day, you see more volatility because all the ARBs and all the leverage, if that price hasn't covered it, there's a lot of pain going on. And everybody says, oh, it's volatility in Bitcoin. The hodlers still hodl, but the margin players really make things worse.
Great to hear, Mark, that you guys are actually talking about DeFi in the Mavs locker room. That's pretty fun. Do you have players who are now pushing for things like, over in the NFL, we hear, oh, I want to get paid in Bitcoin. Is Luka Doncic about to, try to get paid in Bitcoin?
No, that's ridiculous because of the transaction costs, right? Because you're getting paid at a dollar level. So you get, it's not like they're going to say, it's not like a team could say, I'm going to pay you 6 Bitcoin, right, a month, because they'd have to buy all that Bitcoin in advance, and yeah, you could do that, but that's not the way it's been structured by any team talking about it. It's always, okay, if you make $100,000, we'll get you $100,000 in Bitcoin at the moment. And the transaction fees are so high, it's just not worth it. You're better off. There's 100 different ways to do it. And just asking for a paycheck every week in Bitcoin that's equivalent to your dollar fiat paycheck is not effective at all.
We were talking about DeFi investing and DeFi protocols, to some extent, and correct me if I'm wrong, but even as DeFi has risen, it looks to me like those folks have really been crypto native folks. Those are folks who are already into this stuff down the rabbit hole. Whereas, first time Bitcoin buyers, that's one thing, or NFTs, which people think that could be a new kind of doorway to welcome new people to crypto. Is that how you see it, that that's something with the potential to bring new entrants to the space?
No, I don't. I see NFTs bringing interest to crypto, yes, but I think the fractionalization, the securitization of NFTs is way overblown, except for just a few NFTs that are the classics, right? You know, if you have CryptoPunks and
I was just going to say CryptoPunks. Yeah.
Yeah, there's a few things that'll hold their value, you would think would hold their value, right? And that doesn't mean they're not going to go up and down as markets go up and down, but just being able to, because there's no limit to the number of NFTs that can be created, it's really hard to have marketplaces that are dynamic enough with enough volume to assign a legit value to NFTs. And so as a result, you'll get people who will create garbage NFTs, do wash transactions, try to borrow against them. And it's going to be really, really hard to police that. Now, there's mechanisms that allow you to do it to a certain extent, and you might only do business with trusted sources, et cetera. But I don't see that as being a big play at all. There'll be some funds that are created. Hey, I own 33 CryptoPunks, and this is why I value them. If you want to participate, great. But those will be the exceptions, not the rule.
Yep. Yeah. And I agree with you that, like most things, the wheat will be separated from the chaff. I mean, some of these things will prove junky in hindsight. Some will survive and thrive. Yeah.
Okay.
We only have a few minutes left. We've talked about so much, some great stuff. We have to end on Dogecoin, Mark, because
Dogecoin.
you know
Dogecoin. Dogecoin.
I thought you used to say doggy. Now you're saying Doja.
I said doggy to my kid, and then he said Doja one time, so I picked up on it. And so I was like, fine, I don't care, right? Doggy, Doge, Doja. Doja's more interesting. Doja Cat, right?
I mean, all-time highs almost every day, and all the Doge folks are pushing for it to hit $1. And then, of course, you always have to get the caveat, it was created as a joke, and that hasn't really changed. There's nothing behind it. Now, you've said it feels like a lottery ticket. It's just fun. But when people look at the price rising and people making real money on it, you know, to push you a little bit more, what's the there?
So what's changed is, and I didn't even realize this at the beginning when I first started talking about it, you know, like we talked about before, is more how to teach my son about markets when it was trading for under a penny, and then even up to about 30 cents, just to help him learn about the ups and downs and all that. But then I read about the fact, and I didn't know this, that there's a limit of 5.2 billion Doja coins being minted every year. And given the number of billions that are already out there, that's effectively a declining inflation rate, right? There's a limit to the amount of inflation for Dogecoin, even though there's no limit over any period of time to the number that'll be created. And that's a positive, right? It's almost a digital equivalent, whether we like it or not, of fiat, because you can own it. You know the exact inflation rate, right? Which is declining, and it's only 5.2 billion units a year. And as long as it's used for something, as long as there's a utility, so it's not just a tool for speculation, right? And Doja is becoming more of a utility in terms as a currency. You know, you go to Mav Shop and you can spend it, and we sell a lot more in Dogecoin than we do in Ethereum or Bitcoin. I mean, we sell more in a week, more Mavs merchandise in a week in Dogecoin than I've sold in years in Bitcoin, and pretty much in Ethereum as well. People, you know, if you bought something for a quarter and now it's worth 35 cents, you know, you can buy more if you need it, and it's not, you know, and you feel like you've got this money burning a hole in your pocket. And so now you get to buy something at a discount, and you get to use it, and there's utility, and you feel better about it. And so I think that's played out. Now, the challenge with Dogecoin, and people are going to get mad at me for this, is if it gets too expensive, then it starts to fall into that Bitcoin territory where, wow, I've invested a lot of money in this. I really need it to go up. And so I kind of think that it might level off at $1 and become somewhat like a stable coin, where you can use it, you can save it. It's going to stay pegged in around. Now, for a while, it'll go down to 60 to 70 to 80, but over the long haul, I think it might peg itself at $1. That's my guess. But it's only a guess. And if that happens, it'll be interesting. But what I can tell you is, talking to BitPay a lot, they're adding as many vendors. I mean, people are popping up all the time to be retailers or merchants for Dogecoin, and people are willing to spend it, which is even more interesting because it's hard to spend. It is really hard to spend right now. Dogecoin wallets are awful, just awful. And Robinhood won't let you spend it, and you know, it's not really a wallet, it's just, you know, speculation. But if Robinhood, and Vlad probably doesn't like to hear me say this, if Robinhood makes it easy to spend it makes Doge easy to spend via Robinhood, Robinhood will crush it. Dogecoin will have a spectacular future, or any wallet or any platform that allows it, because it's just easy. And buying and selling in crypto is becoming easier and easier and easier by the day, and that is what carries it.
So you are good, Mark, with becoming right now basically on crypto Twitter, Mr. Dogecoin. I mean, you and Elon Musk.
That's Elon. That's Elon. Yeah, he's the Doge master. You know, I'm just along for the ride.
Got it. Got it. Well, Mark Cuban, we got to leave it there.
Okay, let me tell you real quick. I only, the money, tens of thousands of dollars worth of Dogecoin that was spent on the Mavs. It's probably higher than that. And probably now $1,000 that I bought with my son, because I put some on top of it a couple months ago. People think, I own millions of dollars worth of Dogecoin. I don't, right? I own what was spent with the Mavs and some stuff I bought with my son and added on to that just because I was having fun with it. So I'm not trying to pump anything so that I could, make some big, pile of money somewhere. Haven't sold anything. So yeah, there's no pump there at all.
Setting the record straight.
Yeah.
All right, Mark, thanks so much for talking to us again. And we'll talk to you soon from Decrypt. Thanks.
Anytime, Daniel. Thank you.